Hello again. My name is Masaki Tanzawa. I'm a licensed property broker and a property management professional. Last time I finished the opening story of how rent business to be utilized to apply for a Japan Business Manager visa. That was principles to run the rent business by owning the property to meet the requirements. Today, I move into next steps with the revenue models of a property rent business. Okay, let's get started. Let me start again with the principles to run the rent business. In order to obtain and renew the business manager visa by property investment, anyway, it is necessary and important to make a profit and keep it up. Specifically, in the rental business, you need to cover all business expenses with the rent income. That is, the balance forecast should be positive for accounting. These are the expenses you would pay when buying and maintaining a property. Initial cost when purchased, property acquisition tax, registration license tax, stamp duty, judicial scrivener's fee, agent fee, and so on. Annual expenses to maintain, running costs, rental management fee, property management fee, property tax, tax agent fee, and so forth. For making the balance forecast favorable, I would like to know the key point when you find property binding to rental business. That is, a second-hand condo building is recommended to be worked for rental business. Please note the point of view when you look for the second-hand ones so as not to fail. You may see good yield advertised in the selling property, such as 10% and more. For example, if you can look at an advertisement as 8 to 9% yield expected, in this case, it will be enough to consider to be actually a 5 or 6% at most. Anyway, it is inevitable that annual expenses must be figured and counted in the calculation of annual earnings. Then, what are the annual expenses? There are 5 points. 1, property management fee equals 5% of a monthly rental. 2, building maintenance fee equals 5% of annual rental. 3, tax 1.7% of property tax valuation, namely the 1.4% property tax plus 0.3% city planning tax. 4, insurance 0.1 to 0.2% of a building price. 5, utility costs 0.2% of building price. Please note, anyway, these figures are all rough estimate. Let's assume the calculation as a model case. Model case 1. This one is assume it is in central Tokyo. Step 1. To purchase a second-hand condo building of 200 million yen, about 1.8 million US dollars. Step 2. To set up a company to hold the condo, and you will be an executive officer. You will be paid a salary accordingly as an executive officer from the company revenue. Estimated annual rent. It is assumed that a condo has a 9 room with 18 square meter, 1 studio room, and average rent price 6,000 yen per square meter. in the central Tokyo, if it's assumed. So the monthly rent per room will be 108,000 yen. 108,000 yen times 9 rooms times 12 months equals 11.7 million yen, about 11.7 million yen. That is about 110,000 US dollars. Step 3, to calculate annual expenses. It is estimated to be 4.0 million yen, about 37,000 US dollars. Annual expenses. So 11.7 million yen annual revenue minus 4.0 million yen annual expenses equals 7.7 million yen, about 70,000 US dollars, would be the net yield 3.4%. This is the model case 1. Next, model case 2. Step 1, to purchase one second-hand apartment building of 150 million yen, about 1.4 million US dollars. Step 2, as well as model case 1, to set up a company to hold the apartment, and you'll be an executive officer. You will be paid a salary accordingly as an executive officer from the company revenue. Estimated annual rent then. It is assumed that the apartment has 25 rooms, over 16 square meter, 1 studio room, and average rent 3,300 yen per square meters in this area, times 16 square meter equals 52,800 yen monthly rent per room. 52,800 yen times 25 rooms times 12 months equals about 15.8 million yen, equivalent to the US dollars about 144,000 US dollars. Step 3, to calculate annual expenses, it is estimated to be about 1.6 million yen, equivalent to the 14,600 US dollars. The annual revenue 15.8 million yen minus 1.6 million yen annual expenses equals 14.2 million yen, about 130,000 US dollars. That's going to be net yield 9.46%. The profit amount and the rate is agreeable in this case too. However, risk of vacancy may be a little higher than case 1. And the cost for frequent repair should be considered and reserved in case 2. I presume either these cases are sufficiently possible figure if you can pick up the right scheme. In addition, I believe either cases are, in addition, I believe it will be plain and probable to run the renting business in an apartment house. Having an apartment house will be capable of the diversification of risk and the persistence. It just depends whether you can find a good property decreasing the risk of vacancy. Anyway, the company needs to keep running business and expanding year by year while renewing a business manager visa. So that for business continuity, it would be rather be recommended to invest in one condominium or apartment building than a single luxury house or a one room of luxury apartment. Do you need help to invest and apply for a visa? I have a good partnership with the legal offices to assist the visa applicants with the new application and renewal. However, please note that this does not guarantee the acquisition of business manager visa. Please inquire me when you are looking for a property in Tokyo, and please let me know when you think to apply for the Japan business manager visa. I will help you jointly with a reliable law office. Please feel free to send me any inquiries, the email here. So next time I will pick up some topics again. So see you next. Thank you for watching. Bye.